Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, I can hear you loud and clear on another volatile day.
Volatility continues. The volatility continues. Welcome, everyone, to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Topstep performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep for almost 2 years. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and perhaps help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our audience, our chat. Thank you for joining us today. Hopefully, everybody had a good day today. Made it out, unscathed or measured risk. We're seeing extreme volatility in these markets again. Say all the time, it's our job to identify opportunity and take advantage of it, but it's also our job to manage our risk in our accounts. And make sure they're able to trade the next day. So let us know how you did in the chat. Were you up on the day? Were you down on the day? Anything that you learned from the day, or just watching this extreme volatility that is continuing. We'll take a look at the news. Coach, how was your day?
Profitable day. Had a good day. But it was, what can I say? Are you not entertained yet?
Yeah, it's like
If you're
it's almost like stop the ride at this point.
Right. If you're doing this for thrills, no, you got your thrills.
Yeah.
I don't suggest that. But looking at today's range in NASDAQ, again, 1,385 points. S&P range, 1,364 points. But crude oil, 387 points. The volatility has not stopped. We had a respite overnight and right back at it.
So we did. Let's take a look at the news. Not much as far as planned headlines goes. We know that there is some numbers coming out later in the week. We got the FOMC numbers tomorrow. We got crude oil inventories also, which we don't normally talk about, but with crude doing what it's doing, let's see what happens with those inventory numbers. We have Fed speaker tomorrow, FOMC minutes tomorrow. We have CPI on Thursday and PPI Friday. So if you didn't get enough volatility, there is some more potentially coming. But we'll see if the market even cares about these numbers anymore, right? These used to be our big movers, but now, and like we've been saying for a month and a half, it's the T word that everyone is looking at. Here's the headline. Hopes for a speedy end to excessive volatility were dashed when a White House official announced that the U.S. will impose tariffs on China of up to 104%. So while we have some other countries that are, potentially making deals or cutting their tariffs, the two of the bigger players, the China and the United States, are increasing tariffs on each other, which is why we're seeing this extreme volatility. Anything else you have on the news, Coach?
Yeah, I'm trying. Actually, I was calculating 104% tariff. It kind of reminds me of it goes to 11. I mean, what does that mean? 104. I kind of stunned me. I didn't see that, and I'm like trying to figure that out.
How do you do that number?
How do you do that number? Which kind of explains why bonds got absolutely creamed today. The bonds are back to the 1980s kind of swinging markets.
Explain that a little bit, Coach. With the bond market, bond selling off, increased tariffs on China. What is there a correlation there?
Yeah, the correlation is China is the second largest holder of U.S. treasuries. I believe Japan's number 1.
Right.
China, I believe, is number 2, if not 3. They're one of the top. What if they decided, okay, we're done. we're going to get rid of our U.S. bonds. We don't care if we take a loss.
It would be
What
a
it's
pretty
you know,
serious.
it's just we're in a serious spot now.
Yeah.
Um, I didn't know that. I just because I'm a technician,
Hmm.
and that just kind of stunned me. I mean, this isn't a game anymore. This is serious stuff. That cannot help equities. That can't help gold.
No, doesn't look like it can, can help anything right now, unless
Yeah.
you're selling these markets to the short side. Uh, hey, Mohammed, what's going on? Uh, but anything else you got on the news, Coach? And Mohammed, you're right. This is a war. This is a trade war, and a very serious one, and not a game, right? Not a game. We are seeing it from the trader side, right? Day trader side, but it's affecting people's retirement accounts. It's affecting a lot. The cost of goods, everything. So again, I will say it like I said yesterday. Pray everyone is doing well throughout all of this craziness. Um, trading outside of trading, just doing well in general because these are crazy times that we're seeing.
Someone asked, why not gold? Um, Gold, there's a cost to carry. As rates go up, interest rates go up, it affects the price of gold because the interest that you forego to hold gold, well, that kind of rhymed, uh, um, increases the cost of carrying gold. So um, we saw gold did not act well today with all this. So
We
it
got
just reminded me of old. I still see it now and again. Is sell us your old gold? Like really, this gold is old. I need new gold.
yep. Gold does not get old. Dow trades probably so far early contender for comment of the day. That was a nice V-shaped recovery to the down. That made me laugh. Thank you. I needed that laugh.
Yes, very
Let's talk
good.
about the markets. We got 35 different markets we can trade with Top Step accounts, not just the equities. And today, to the downside, we had the Russell down 3.12%, crude oil down 3.69%, and natural gas, yeah, natural gas down 4.4%. To the upside, we had the Japanese yen up 0.96%, soybeans up 0.97%, and corn, our biggest percentage mover to the upside, at 0.97% as well. To talk about our big four, we already mentioned crude oil down 3.71%, the S&P down 1.92%, gold down 0.66%, and the NASDAQ down 2.20% to round out our big four. All right, I'm on a NASDAQ chart here, coach, on a 30-minute. Wild day. Like you said, 1,300 point range, high to low on the day. We got a question from Bernard. Would be a good idea to sit on our hands this week and do nothing? That's an option, right? That is an option. We heard Hoag say it on the Sunday kickoff. These type of markets are not for him. He understands when he trades really well and when he doesn't. And this extreme volatility, he likes to take a back seat and kind of just watch it from here, right? Where I don't disagree, right? This is some volatility. I said yesterday was top three craziest trading days that I've ever seen. Uh, is this a two-peat that we're seeing here, right? Is it just going for two in a row? It's going to take the top five. Pretty crazy range, coach. What are we looking at here on a 30-minute?
Well, starting last night, we talked of that big volume from yesterday. We had some short covering or some, what I guess hope.
Right.
Whatever it is, there was buying. So if we frame out last night, we had a nice breakout of urgency in a half hour, where we rallied to a white line level.
What is that white line, chat? Anybody
The,
know? What's that white
and
line? We'll see who's been paying attention, coach. Who's been taking notes? We're on a 30-minute chart here. I know they're on a little bit of a delay. White line up here. 200.
Yeah,
Like there we go.
first one, yeah, 200. That which was a nice what was it up 500 at that point or 800? It was up.
Uh, Up about 550. Up about 550 there.
Okay. Um, so that was the test, and it actually closed above it on the half hour,
Yep.
and that was also one of my first level of resistance. Um, so let's put a at that point I put a anchored VWAP on the high.
Resistance the entire way down.
That was my day. It's the same thing in the S&P,
Yep.
but not surprised. Look where it went to, the high of that wick from, was that yesterday?
Yep, that was yesterday. And we talked about this a little bit, Coach. I actually missed this on the Sunday kickoff, but we talked about it during the opening call today. Uh, 5 a.m. Central Time, Friday last week, April 4th. That's when China responded to Liberation Day, right, and said that they were going to increase tariffs. That 30-minute candle on the Nasdaq, the low of it is 18,098 or 18,100. The high of it, 18,600. 50% of that candle is 18,350, and it's where we rejected a bunch of times. So I see some traders in the chat saying, no, this is not the time to scale back. This is the time to make money if you have a strategy. The one thing I think we focus on really well here, Coach, is the fundamentals are they're the fundamentals, but from a technical perspective, we're approaching the markets the same exact way, right? That has not changed. Now, have the ranges expanded a ton? Yes. Which it's extremely important right now to think risk management. I had a great day today trading as well, Coach, and leaned on a technical approach to a fundamentally driven market, and I think that's what we all need to focus on right
Here's if you choose to, the basis for how I size up is relative to the volatility
now.
and the size of the account. If you have $3,000 balance in your account, and we look at let's look at the 5-minute chart and look at the ATR in a 5-minute.
Call it 9:30 Central Time, 74 points.
74 points times 2 to 150. All right. So if you're willing to take $150 to $200 risk, one to one and a half, I wouldn't suggest one because I need to give up myself room, but that's the risk in a 5-minute on average. You can trade, but on a $3,000 account, how many trades can you take? Because you have to budget it out.
Right.
But if you're trading a mini, you have to be right.
Have to. No room for error.
So that's the way position sizing, the way I look at it. If it gets much more, I don't trade minis anymore, and I have a much larger account.
Mm.
Actually, the margins I get every day, 2-3 times a day on my phone. Margins back up to a point. It's full margin. That means it's cash margin.
Yep, that's where I'm at too.
So that's like $25,000 on a one lot.
Yep.
Day margins probably half of that. I don't look at.
I think day margins are like for what I saw, it was like $4,000 for Nasdaq.
$4,000.
Right, yeah.
On a micro or a mini?
On a mini.
On a
Micros
mini.
are like 20% of that, I think.
Okay. So one thing for position traders or for the public at large or for margining purposes, that eliminates some players. They don't want to put that margin up. And the next step in that is less liquidity.
Yep.
And that's what we're witnessing. And by the
Sure.
way, that's the way the system is designed.
We got some. I got a question here from Robbie. Can you unpack technical approach to a fundamentally driven market? Yeah. These are not just our normal. Hey, the markets are open, so let's trade the markets right now, right? The fundamentals. Every time a headline comes out, it is going to move these markets right now, real headline or not. But a technical approach to a fundamentally driven market is just because I hear good news, I can't just buy it, right? Or because I hear bad news, I can't just sell it. I have to have a technical reason to enter those trades, right? So, for example, the for Coach Paul's short, right? Technical approach says shorted against this 200 moving average, whether we're trading, 1,000 point range in the Nasdaq or a 200 point range in the Nasdaq, right? Same technical approach, but the fundamentals say, uh, you know, I would think let's pay attention to the volatility around that area. And then what that could also mean is, use a technical reason to get out of the trades as well. But we're seeing bigger ranges, right? Another technical approach is that ATR that we're measuring. So if Coach Paul is getting in short against that 200 moving average on a 5 minute, technical approach says your stop needs to be wide, right, Coach? Your stop needs to be at least
Yep.
150 points on a 5 minute. On the other end of that, the technical approach says your reward on that trade is a lot bigger as well, right? Potentially, right? So you're looking for a 2 to 1, and let's see here. I'll pull up our long short tool, right? So if from a technical perspective you're risking 150 points, and we saw Barron do this today. Barron had a $700 700 point trade in the Nasdaq, right? But you know, if you have a technical approach that you can repeat, like everyone was saying in the chat earlier, these are the opportunities to make a decent profit on these trades, even with micros, because you're looking at it, risking 150 points. 300 points was, you know, that could happen in a couple candles in the Nasdaq right now.
Great explanation. And by the way, Barron did a great job. And I like his systematic approach.
Yep.
Someone asked, why don't you just take the money now? And he's like, well, but it's an
Why?
85% chance it's going to continue. He
And
didn't he didn't hesitate. He has a plan. He knows his plan. He's precise. I was very impressed.
yeah. And I know he was looking at some order flow stuff. Dakota was short from up here as well. So really nice trades by the team on fast markets. Leaning on their technical approaches to the market and then going from there. Right. What I would hate to do is just lean only on the fundamentals and say I want to short it, but I short it here just because the markets need to go down, especially in this environment where this counter trend move at this point, Coach, is these counter trend moves are huge, right? This counter trend move here, if I'm shorting it in the hole at that point, is 150 points. So uh, have a reason for getting in and out of these trades from a technical perspective, and then go from there. But really nice move here. And somewhat of a two-sided trade in the morning. If we look at the New York session open, obviously we were opening up about 2.5% up in the Nasdaq. I had asked Hoag about this on the opening call. Do we see, uh, you know, uh, these longs in overnight take profits on their positions? It looked like we were going to push and just trade above this high, Coach, from yesterday, and we got to that 200 moving average and rejected right away. This is a decent long here, is 150 points,
Yeah.
uh, but once that view up start to flatten out,
Yeah.
about
And then we closed below it. But that was a great trade. That was a 2 to 1 on the buy side. So
yep,
like I said, there was, like we said before, I took the sell side
mhm,
on the opening because it broke
okay,
and took my loss.
yeah,
No problem. But I got another chance to sell it. So whatever your plan is, focus on that. But there was a great long last night. I mean,
oh yeah, it was.
we could rule that out. It didn't. There was one that was hardly any heat, and just melted up slowly.
It did. All right. Anything else you got on the Nasdaq, Coach? Let's take a look at the S&P really quick.
Yeah, I'm good.
Very similar chart here in the S&Ps. Go back out to the 30-minute chart. What's that white line?
That was even better than the
They
NASDAQ.
can't keep getting away with this, or they can.
You
Running
know,
running the
nature,
play right in front of our face.
you nature has its way. Um, wow. Yeah. What can I say? I don't. Okay, we'll go through it. It was the exact same thing as Nasdaq,
Exact same
although
thing.
Nasdaq did close above it. S&Ps couldn't close. So once again, we can put it with anchor VWAP when it touches that. And why? Because if it's going to change, and we say we've seen this before at the 200, what can give us the confidence, or what data can we show that it's working to sell? Well,
Good point.
nothing better than VWAP to
Volume.
me.
Yeah, that volume died at the highs. And remember, we don't know at this point, even if there wasn't a headline coming out, it's like this doesn't look like the best buy here either, because we got a flat VWAP, prices, trading at this 5,300, which is a major level. If we're going to trade above 5,300, we need to see some convinced buying coming in. So from a volume perspective, if I want to stay in this long, I should see volume increasing and not decreasing. And then the headline comes out and brings us down. So same technical approach. I think this 5,300 level is, I don't have to tell anybody, you can see it on your charts. Major level, again, marking out that 30-minute candle from China's response, 52.87 at the low, 53.95 at the high. If every time we get up here in the equities we reject, I'm just selling it again. That's not financial advice. That's just my plan. Go ahead, coach.
Nothing need be said.
Yeah.
You are correct, sir.
All right. What are we looking at towards the downside, right? We are at lows of the year or pretty close to them. So if this on a daily continues, we talked about this, right? These bear market rallies are some of the strongest moves that we see. And yesterday we had an 8% move, 8.5% move high to low in the S&Ps, but nothing is holding, right? There aren't any, convinced buyers holding prices higher. So at this point, coach, we're trading 5,000 in the S&Ps right now. Low of the year is 58.39, which is 3.5% away from where we are right now. Going into tomorrow, and we talked about this yesterday, the news that was quote unquote good news was not real. So nothing has changed. And it's only kind of increasing a little bit. I think some of the tariffs are supposed to go in place tonight, or if they haven't already. So I'd be looking at, if we can't hold above 5,100 in the S&Ps, to go take out that low and make new lows on the year.
That's
What
the
else can you
flow.
say? Yep. Yeah.
I mean, you want to catch the falling knife?
Not me.
Yeah, you can. There's pieces. I don't want to, but I have to focus because I prefer swing trading, but focus on day trading. Yeah, there's opportunities to buy this too.
Mhm.
But the overall flow, this is a very heavy market. I'm on repeat because it is.
Right.
Sell the rips. Buying, the only buying that can be defined as buying is most likely short covering or small institutional buying because they have to buy it anyway, but they're not laying it out. They're not all in.
Not buying it because they want to. They're buying it because they have to.
Yeah, and they don't have to buy 100%.
Right.
They can under allocate. But yeah.
We got a question for you here, Coach Paul, and then we're going to move on to onto gold, unless you have anything else on the equities.
No, I'm good there.
All right. You got a question from Psalm 91. Coach Paul has been calling liquidity issues for well over a couple months now. He was spot on. Any updates on what you see? Thanks.
Much the same. And when I say liquidity issues, the liquidity issues here are a function of the volatility. because volatility, let's think about the hierarchy here. Um, there is, we talked about it before, stocks are designed to go up. They don't like to go down. So when you have, when we're talking about liquidity issues, there is a Amazon river of selling. It's just relentless. Who now, it isn't designed for that. So who has to take that imbalance? Now, this is a really good question here. Who takes the imbalance? If now we have liquidation of larger funds,
Mm.
mom, pop, 40, 201k, all this selling, who's going to absorb it? The usual buyers
Yep.
are not there. So it's market makers, the public. So they have to make up for the beating or change the measurement to say, okay, we're going smaller on our bids. Like I said before, if they're, and it's just an example, if they're 100 up, now they're 50, maybe 25. And so that doesn't stop the selling. So liquidity issues become, and we see it. Um, if it's a liquid market and there's no volatility, you see NASDAQ, quarter bid at a half. Okay, and now this liquidity comes in, or this nonstop selling. I can't continue to take the other side of this as I'm a market maker at that tight spread. Widen it. I'm 25 up, and this happens naturally. I'm 25 up, but not only that, I'm not a quarter bid at a half. I'm even bid at 10 and a 20 only. And that's really, that's a function. That's how markets function. So that liquidity, we saw it early. That was very bearish sign, and it just continues. It could get worse. With these kind of moves, you start finding out. Warren Buffett put it so well. When the tide goes out, you find out who's swimming without a swimsuit. So you're going to
Mm.
start seeing I believe you're going to start seeing some headlines of some institutions getting blown out. There might be some market makers who say that's enough. We can't, not only we're going to shut it down. So
Yeah.
that's where liquidity starts happening, where the usual players are like, not, no mas.
Good stuff. I think that answer deserves a hit of the like button if you haven't done so already. Hit that thumbs up button, like and subscribe. Tell your friends and family to as well. Great answer, Coach Paul. Let's get into gold really quick here. Speaking about liquidity issues, right? We were talking about potentially. I was looking at potentially buying gold, and that was short lived as well. Have an asset that's in the profit, you might have to sell it to cover something else, and that's what this is looking like right now. What are you seeing here on the daily chart in gold, Coach?
What you just said, um, sitting on the on the edge.
Yeah.
I'm glad you brought that up. I looked to sell it last night. I couldn't find. Maybe it happens tonight, but something's going to happen. This is going to move
Mm,
pretty sharp out of this.
yeah.
Um, so I was looking. Bonds were still on their lows, making new lows in the after session. That's giving me a signal that gold could dump. Now, it's still a bull market, but for a day trade, I'm going to lean on the sell side. Um, I think if there's liquidation, we'll talk liquidity issues. Some big entity starts dumping gold, we could
Yeah.
see an extension to the downside. I think for the buy side, it has to spend some more time grinding sideways. Um, but like you just show that daily, that just looks heavy. Kind of looks like S&Ps did about a month ago.
Yeah, it does.
Was that a
Uh,
month ago? Feels
yeah,
like
yeah, man, I thought today was
hell.
Thursday. I'm not gonna lie to you. I thought I woke up this morning, we was on an opening call with, uh with Hogue, and he said it was Tuesday, and I'm like, "Oh, that's what day it is." I thought it was Thursday. Mohammed had a question. Maybe the market would go down without executions gap, so the value goes down with nobody selling or buying. That's a possibility, also, right? There's a couple of ways that the markets can move. Um, if we remove all the bids, and then there's a trade, we don't have to trade all those in between prices. Now, how wide that spread gets, I don't know. I don't know. See that, but yeah, there's two ways to move a market. You can either sell it, buy it, or remove your orders, and that'll change the market as well. So, Mohammed, that's a good point. Maybe we do
That's
gap down. Uh, I
that's
don't know.
called like old school gap and go.
Right.
And you know, what if they all the bids are, you know what happens when all the bids are removed? Limit down.
Limits. Yeah.
Yeah.
We've been
I don't know.
close.
If someone
We've been
asks, is it
close.
5% for the gold? I don't know. I used to
That's a
know everyone because I used to do that for the exchange, but they've changed it to percentages. Hopefully, I'm short when it goes limit down. Um,
I just put a oh, I didn't mean that to you, Psalm. I just put a link in the chat to the CME price limits. Take a look at that. I don't remember them off the top of my head, but they're all on that list there, and that site's really nice. It'll update the exact prices for the markets that we're trading, so you don't have to do the math on your own. All right. Yeah, Coach. This is looking heavy. Maybe we get another test of haven't done it in a little while. It's been almost a year since we've hit that 200 moving average, but this looks pretty heavy
yeah,
on a
it looks heavy, and therefore, if it goes to the upside, let's not. I don't rule out the upside. This is support.
true.
This to me, that'll be above the 200 moving average. That's got it from my trading.
Right.
But heck, I don't. You know, one thing is, and when you traded long enough, and that was my mantra when I thought I knew it all is, you don't know.
Nope.
All you can do is execute a trading plan. Um, Allows you to be wrong.
100%. Speaking of trading plans, Rolled Sushi has a question. Hey, Coach Jay, what do you do if your current trading strategy seems to be yielding more losses than normal? Like conditions have changed. How do you adapt? It's a great question. Coach Ray and I do a class with a group of Topstep traders, and part of analyzing your strategy is knowing when it works and when it doesn't work, right? If you are a great range bound trader, these market conditions, I don't, Coach, when's the last time we talked about a range bound market?
Well, you weren't trading corn.
Right, right, right. So,
Yeah.
you know, maybe it might not be your strategy. And for me, I never, shouldn't say never. Where I'm at now with my trading process, it doesn't need to change, right? It may need to adjust, right? But I do everything the exact same way. Technical approach is the exact same, right? Measure volume, see how the market trades around it, trade from there. What did need to adjust, and I did this yesterday on fast markets, right? You guys saw me trading micros in a combine because I had to adjust. Okay, I know how I approach the markets, but we're seeing 200-point candles. So I need to know how this feels to trade this before I actually put some real money at risk. And that might be it, right? So I think when you review your charts, first review to see whether or not what you're looking at technically is actually still playing out, right? Again, if you're a range bound trader, the range is 1,300 points in the Nasdaq, right? So maybe look at a higher time frame range. So see whether or not the market conditions facilitate your trade style, and then if it does, see whether or not you may just need to adjust the risk parameters, right? Because if you're getting stopped out and you're trading the Nasdaq with a 20-point stop, we just measured it, right? 150 points was reasonable. We saw Dakota trade micros yesterday with a 300-point stop and get stopped out. He did the same thing technically. The market conditions are just not facilitating the same risk parameters. So you have to adjust that way. Uh, What level do you guys have for potential capitulation? JT Irby, give us a market, and maybe we'll take a look there. Let's go over crude oil, coach. Crude oil on a daily. And what are we looking at here?
Oh, I thought that was the S&P. Yeah. I hang my head in shame. I went to sell it today, and I felt trapped to a little higher. I'll sell it. Um, yeah, this. What can you say? It was a great sell. That I chose not to. I had a lot on, but hey, that's an
Yeah, I
excuse.
mean, you
I
trade
should
like
have sold
16
it.
positions at the same time. Coach Paul is in. He looks at the quote board and he says, "Yes, I will take one of each." Uh,
I'll take the left side of the
right,
menu.
right.
Um, so let's look at the half hour. It was um now we had let's look at 8 o'clock US Open, not to be confused with golf.
Go.
Oh, okay. VWAP that VWAP breakout, well defined risk. It wasn't that great. I mean, it just sat there when it broke out. We broke out to the downside on price, but it was interesting. It broke out with price and VWAP. Well, I don't say that was okay. And a nice break. It's trending down, looking for sells. That was a pretty nice one. It was the first time because I am aggressive is probably why I hesitated. Um, yeah, it still happens to old dogs like me. Uh, but can we say this market is in a downtrend? Absolutely. Shouldn't be shy to take that. Sellers came right back, and wow, we finished near the lows. We're still on the lows. So downward and onward.
Yeah, we were making new lows after the close. Right, crude oil closes at 1 p.m. Central Time, and we were, we were just getting started at that time. Right, from where settlement is going to be, we're down about 3% from there. So, and again, these are prices that if we look at a daily chart, got to go back a couple years. The last time we traded these prices, and we talked about it before. If this starts moving to the downside, I don't know where the level is down here. 50 maybe could be a pit stop, but uh, if this starts to get going, who knows, coach?
I don't know.
Yeah.
I don't know. All I know is that I'm stubborn in executing a trading plan.
Yep. Matthew says, "Dang, my practice account disappeared. Time to start an XFA. I hate being this nervous, terrible feeling, just awful." If that's what you're feeling, you don't have to start the XFA. You can reactivate your practice account if you're on the old dashboard still. Um, Remember, we don't have to trade, right? And that goes for everybody. We don't have to trade. All right. Any other markets we want to take a look at, Coach?
Yeah, one we haven't looked in a while. And I've been talking about Japanese yen.
Hmm.
Buying, doing all right buying it, but the Swiss franc
Okay.
is is the play.
Oh yeah.
Yeah.
Early scouting report for the Swiss franc. Oh,
Oh,
that's pretty nice right
yeah.
there. This is a daily chart.
Yeah. And considering all I mean, it's a safe haven. That's what when we talk about Swiss bank accounts and Swiss banking laws. But what I've been playing the euro and the yen, and I looked at the Swiss franc. Take a look at that half hour. Beautiful
Oh,
low on the 200.
this was yesterday. Man,
Yep. Look at today, bouncing off that
beautiful.
200 again.
That is really nice.
Breakout. Now look at it goes right back to the opening range where they find. Can we? This is a great. I'm glad you put that there. Look at what and you've defined this many times, Coach.
Mhm.
Come back to the test.
Yep.
So, what does that mean when it comes back to the test? That there's still bids there. They ain't gone away, as we say in Chicago. Um, but a third time comes back to there. So this market is being accumulated and it's picking up speed to the upside. That's going to be my currency of trading choice now.
Hmm. I like this. I mean, this looks like a pretty good try. I don't know. I probably placed less than 5 Swiss franc trades. I placed a couple because we had somebody mention it in Discord last year that it was a nice market to trade. Looks pretty good. Hopefully, it doesn't stop once I decide to get in it. Uh, all
Yeah,
right. We
there is that possibility.
Yeah, right. All right. Starwood Anime asked a question, and Coach, I said we said we weren't going to talk about it in the green room, but we'll talk about it. When does this get less stressful? Starwood, I'm going to ask a question. Somebody already asked it. Are you trading the Nasdaq? It, that's a question. But when does this get less stressful? It doesn't. I eh, I think the stress changes. Right, it's different stress, especially if you're actively day trading. If you're swing trading and things like that, maybe the stress goes down. But actively day trading, uh, I think we learn to cope with the stress. But it's you still have to execute a process every day, right? So I think after a while you don't call it stress, but you call it. There's another word for it. I can't think about it. But what I will say is I had a great day today. Coach Paul and I talked about it, and I felt uneasy, right? Because the markets right now, especially if you're trying to figure out trading these markets, where again these are some of the craziest days that some of us have seen as traders. Uh, yeah, it's going to be higher stress. So when the ranges go back to normal, say that, just like you hear people say, I traded 2008, I traded 1987, I traded, COVID years. This is similar, right? So this is probably the highest stress, if you will, that it gets um, because the ranges are expanded. So when those ranges go back to normal, um, you could say, hey, I was forged in the fire. You're trying to figure out how to trade these right now, and then we go back to 400-point ranges in the um, but that being said, even when we go back to those lower ranges, the process is still the same for day traders, right? You still have to manage your risk, you still have to execute a trading plan, uh, and that's an everyday thing, right? This is a performance sport that we're playing. So your favorite athlete, right? They could go and somebody could score 100 points in an NBA game tonight. If they don't score above 10 the rest of their career, we probably don't talk about them in a good way, right? So you have to play the game every single day if you're day trading, right? Now, sometimes you're not going to be mentally prepared to do that, and that's okay. But you have to be honest with yourself in that situation to not put money at risk when you're not mentally there and capable of making those decisions. At the end of the day, this is a performance sport, and if you're not ready to perform, you know, I wouldn't sit at your desk.
Well said, Coach.
Thank you, coach.
Well
Got
said.
anything to add to that?
Yeah, two things. You're in college. Did I read that right?
Yeah. Oh yeah.
Great time to start because it takes time to learn how to trade. This is it's a rare bird that just takes to it and can continuously makes money for a large period of time. Um, so starting young and getting that experience will help you, will tamp down as you have experience. All wisdom comes from experience, is an old saying. That experience, you'll get used to it and then you'll develop a trading plan with risk management in that. And then over a couple years, it'll be boring, and that's good. Um, so continue to do it. Don't give up. Feel that feeling. I've put it too much like learning to fly a plane.
Right.
right? You just don't jump into that plane and steal. If someone steals a plane without a pilot's license, you don't you have to learn how to fly. There's a lot of moving parts. I had a trader tell me once, he goes, he's an option trader with a trading vol. He goes, you know, this is much like flying a plane. 90% of the time, it's great. 10% of the time, you think you're going to die. So get used to that. Learn. Don't be afraid to fail
Yep.
and learn from those failures. So part of that nervousness is I got to be right. I went through it. Believe me, I was young. I was in college, I working at the exchange part time, going to school part time, and I had no idea how to trade. I just had to be right, and I studied fundamentals. So you're on your journey. Develop a good plan. Learn how to lose well, and dynamically you'll get better, and you'll be more comfortable.
Stuff, coach. Good stuff. All right. Mohammed had a question. Try to see if we can answer this one. I have a question. If all markets move in demand supply mechanism, how does the Nasdaq and MNQ how are the Nasdaq and the MNQ always at similar prices? No way that the demand and the supply are the same for Nasdaq and micro Nasdaq. They try to keep them close, but sometimes you realize that they're at different prices, right? And they're all derivative products, right? The micro Nasdaq is a derivative product of the Nasdaq, which is a derivative of NDX. So they're all going to try to follow each other. I think it's market makers' job to kind of keep the markets in a general range of prices. Uh, but sometimes there are price differences, right? We actually have seen a couple of times where traders have called out a level and said, "Hey, this level hit in micro Nasdaq, but it didn't in the Nasdaq." So they definitely are different products. But I think it's the function of those providing liquidity to the markets to kind of keep them in a general range. How did I do explaining that, Coach?
But perfect. But I have
Awesome.
nothing to add to that. I'm also seeing some great comments and questions in the chat, and I really enjoy that. It
Mhm.
means we have a good audience, um, and some great comments. And Mohammed, thanks for joining us there. One of the things I really enjoyed was who was it? Oh, Bryce Gibson. I am a
Okay.
pilot, and there are many similarities. However, in one, you lose all your money, the other, you die. Both are focused on avoiding. Um, that's for a pilot. So, yeah. But the thing is, you don't die in trading, you get up and learn. You can.
Yeah.
So, that fear is, most of the fear is about losing money. At one point, being in the same emotional state, whether you made money or you lost money. Um, so great comment. Thank you, Bryce.
Good comment. It's good stuff today. Nothing a question. How long did it take you? Any other markets we want to go over, Coach, or we just want to go questions?
Let's just go questions.
All right, cool. Nothing has a question. How long did it take you to get a relatively strong grasp over the markets, like you could look at them without being completely lost? Well, if you ask Jay from 13 years ago, it took about a week. I know what I'm doing here. I'm just gonna click a couple buttons. I know how this works, right? It either goes up or down. You buy it, you sell it, and then you make money. It's that easy. And then I lost a bunch of money doing that after making some money. And then you figure out that it can't be that easy. Um, and I probably got a little bit lucky. So it took me from that point that I found a mentor that kind of taught me all the volume analysis stuff that I use to this day. Uh, that took about 6 years. Uh, to fully grasp it. To get to the point where you're not lost, where you're, because there's two different things, right? There's analyzing how the markets move, and then there's actually executing it, right? So once you develop a strategy that you like, that learning curve could be different for every person, based on your risk tolerance, honestly. Um, some people are more prone to risk, and ultimately in trading, we have to accept risk, right? Anybody can analyze the charts and say, "Oh yeah, it's going to go to this line and then that line," but if you don't actually put the money behind it, that I think is what uh, causes a variance in uh, that learning curve, right? Are you willing to actually put risk behind your trading ideas? Um, that's the biggest thing.
Ante up. Let
Yep.
me- One of, I mean that it's much as successful. The difference between gambling and speculating is gambling. You're entering, trying to beat the odds with no plan,
Mm.
no. There's no measurement. Speculating is measuring your risk to execute a longer term plan. It's an important distinction. Um, oh, by the way, I had a comment on Mohammed about micros versus minis.
Mhm.
It's a great. I mean, this help you. I grew up at the Mid America Commodity Exchange when I first started. Um, it it was the original mini contract exchange. They traded the minis 1/5 of the soybean size, half the bond size. Anything that was successful, they would do that. Now, in that, there was an arbitrage. So we used to have actually arbitrage traders on the phone of the board of trade and the mid am all the time, trading in and out. That's all done by computers now. So get an edge, get an edge. Well, however these market makers do it, it's in an algorithm, but they match it up with an edge, get 10 on. I don't know the exact way they do it, but I know the way they used to do it at the mid am with soybeans, with bonds. And then the good part is that um, they're they're cash settled instruments, so they don't have to get out of everything. They can match it up into expiration, but it's a huge arbitrage. Um, and I'm sure there are entities doing it.
Rough. Uh, how do you train yourself to be a good loser? 4 years trading now and still find myself struggling with this. Except that it's part of the game. Uh, I used to tell something to my younger brother all the time when I coached him in basketball. He would get upset every time he missed a shot. He could really shoot. Uh, he was like in high school, he's probably 35% from three, if not
Wow.
40. He was up there. Uh, but it took him a very long time to get there because he was always mad when he missed a shot, and he was always trying to figure out like, oh no, I gotta just perfect my form a little bit more. It's just like no, you just have to accept that you're not perfect. Um, and I would tell him and all the kids that I coached, if you get upset every time you miss a shot, you're not gonna play this game very long because it's just gonna eat at you, right? And you're not gonna be willing to accept that. Same thing here. If you get upset every time you lose a trade, you're not gonna play this game long. Or you are and you're just going to continue to struggle doing it. So accept that losing is a part of the game. Um, and that's why Coach Paul, more than me, says it all the time: manage the risk. Right? A loss is going to happen; it's inevitable. Now you got two choices with that loss: you could risk your entire account, or you can define it right now. Right? I'm not going to lose more than X amount of dollars. If you define it now, it makes it a little easier to accept. Um, but it has to be a number. Again, these markets are huge. Uh, you could have a $50 million account. If you can't accept a loss, you could have lost it all yesterday in that Nasdaq move, the entire thing, one sweep, right? If we can't define how much we're going to risk, so maybe not 50 million. That's a lot, but I mean, maybe, probably, but yeah, accept losses, right? Um, and
Yeah.
I don't know that it becomes easier. I hate losing trades. I don't want to lose a trade. I want every one of my trades to work, but that's not realistic. And the sooner you accept that, the sooner you can say, okay, if they don't work, great. When it doesn't work, I'm only going to lose X amount of dollars. Moses used to smile after every losing trades. Sometimes I laugh, and that works big. I mean, I took a decent amount of trades today. I think I took 13 or 14 executions. Six of them were losers today. Profitable day. If I overreacted to one of those losers, coach, I probably, you know, go completely the other way.
Well, there was a famous group of traders on the Chicago Board of Trade floor who were trained. One of them is a very, by one of those traders is now a very successful hedge fund. And Everett Clip was his name.
Hmm.
Gentleman farmer. I mean, he's just a pleasant older guy who's made his fortune trading grains. And he trained younger guys to trade in the bond room. And I knew a few of them. And one of them, we are talking one time. He goes, "Yeah, I got to go through my mantra." I said, "What's that?" He goes, "Love your losers."
Hmm.
You know, my reaction, and I've told this story before, was like, started with an F, ended with a U. Like,
Right.
come on. What do you mean love? I didn't really, I found it almost offensive. I was triggered. I'm like, here, take my losers, love them. Like I can never love them. He didn't take that offer, but why this guy did that is that you have to learn that losses are the same as winners, and you can remove the emotion of trying to be right. We
100%.
were brought up in society where being wrong is to be avoided. In school, you're going to be put down. You're not going to get into those schools. You're never going to amount to something. Yet the learning process is about failing well. So what he was doing is trying to remove the stigma that a loss was a negative, shameful thing, and it worked. He had a lot of good traders.
Good stuff, coach. Mohammed, great comment here. Don't overreact with happiness if you win a trade. You're sending your signal. You're sending the wrong signal to your subconscious. I agree. Uh, I've told this story more times than I would like to admit, but my biggest trading day ever at the time, I lost all of it the next week because I thought I was him, and I am him, but I thought I was God's gift to trading and humbled very quickly. So
Oh yeah.
just remember that. Time for our newest segment, our newest addition to At the Buzzer. Let's get a drum roll. Uh, tomorrow's limit prices. This is the environment that we're in now, everyone. Tomorrow's limit prices, here they are. Thank you, Andrew, for sending these over. Take a screenshot of them, put them on your charts, label these prices. If you are within 5% of the, uh, if the market that you're trading is down 5%, and you're trading in a Top Step XFA or a live account, you're going to need to be out of those trades. So just mark those down. Maybe we don't need them. Uh, but I'm not going to bet against that. I think we probably will need them. So take a look, mark those down. Thank you, Andrew, again for sending those over. Uh, yeah, let's see what tomorrow brings. Got
Well,
anything before we go, Coach?
plan your trade your plan. Wins and losses are the same thing, but it doesn't happen right away. Um, and that's it.
Some good stuff. Let's see real quick here. We got a bunch of different segments. Coach Hoop is doing a class in Discord in the next 15 minutes. So go over there and check him out. Then we have Coach Ray and Coach Vince, 6 p.m., 7 p.m. Central Time. Coach Dakota, of course, with slow markets at 7:30. Aaron Luce doing the London Open now at 1 a.m. Central Time. Uh, I think that's right. Yeah, 1 a.m. Central Time. Deanna still doing her segment, now called Euro Trade at 3:30 a.m. And we are pretty close to 24-hour coverage of the markets at Topstep. Um, all education, hopefully to help you with your trading journey. Go to any of these sessions and ask questions of the coaches. Right, that's our job to kind of give you our perspective of the markets. No one's ever going to be 100% right. We're not going to pretend to be. But hopefully, we can help you with your trading journey. Uh, Trade well, manage your risk. I will see you all tomorrow for fast markets. For my VIPs, if anyone is here listening, let's do 12 o'clock tomorrow, 12 Eastern tomorrow. I'm going to get away from this desk for a little bit. Got to take some care of some stuff. Um, so let's do that tomorrow, and we'll talk to you all then.
All right.
Hit
Goodbye.
that like button too.
Yeah, that too.
Later.